Topical study. Give me some ideas, IT. Come on. Give me something to work with. Give me something to get my hands into now. Okay. Opening range, first 30 minutes. 9:30, 10 o'clock. Every day this coming week, your obsession is that only. Now, since it's a topical study, you can do what with it? You can do it over a couple different markets, not just NQ. And you will learn to see that there are repeating phenomenon happening in all the other markets at the same time. They're not one-trick ponies, okay? That's how you know it's algorithmic. They don't have this same algorithm, this one algorithm that drives all the market. You're right. They don't have one algorithm that is tentacles into everything and it's controlling all the different. No, every individual asset has its own script it runs off of. And what do you think that script is? It's the same source code. I don't want you to believe me, okay? I don't want you to believe me. I want you to go out there and try to debunk it. I want you to look for evidence to be the contrary. I want you to do that because when you do this, I got you. Just like that. I got you. Because you will never be able to wrestle away from it saying, no, it's not there. Because you're going to see it. If you live this life as a speculator, never looking for evidence, never looking for signs and proof that there is a script behind price, it's no wonder you're never going to recognize it. You're never going to see it. But when you're going in and looking for clues, looking for evidence, the breadcrumb trail that's left by it, undeniable. Undeniable. And how can you prove it? Because it's happening at the right time. All the time. All the time, on time. That's what the algorithm is. And so you're not trying to beat the market. You're never going to beat the market maker. You're never going to beat them. The only thing you can do is ride on the wake that they leave behind. They can't hide it. They're never going to be able to hide it. And that should be an encouragement to you. And by looking at a topical study each week, the opening range, what does the first fair value gap do in that 9:30 to 10 o'clock? How is it used that day? How is it used for the rest of the week? How is it used in the afternoon session? How does the first opposing imbalance, for instance, let's say, one of my students also asked about this. He's probably tickled right now because he knows where I'm going with this. Let's say, for instance, the first time the fair value gap forms in 9:30 to 10 o'clock in the morning Eastern time. So you say it's the first moment it forms, and it happens to occur on the basis of a down closed candle. So it's a SIBI, sell-side imbalance, buy-side inefficiency. So down closed candle, imbalance, lower close. If you're bullish, if it trades down into that and stays with the bodies in the upper half, that's indication that it's likely to start spooling higher and order flow should be delivered on a bullish bias. That means up closed candles and then any down closed candles should support price. That's the dichotomy. Once you see that, it goes boom, 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 boom. That's your logic. That's what you roll into. That's your thought process. The very first buy-side imbalance, sell-side inefficiency that forms immediately, same time frame, after that first presented fair value gap, that's a SIBI. You want to recognize the first fair value gap, that's a BISI. So it's the opposite of what the first presented fair value gap is. Okay. So if it's the first presented fair value gap, it's a SIBI, down closed candle. The first bullish up closed candle fair value gap, BISI. You want to start tracking that one too. Carry it through the rest of the week. Not just today, not just into the afternoon, carry it for the week. There's this relationship there that I want you to see for yourself. Not just today, carry it through the week. Okay. That's your topical homework for this week. Don't just do it in NQ because it's very simple. It only takes a minute to pull it up in your charts and click extend right. And then there you have all the information to study. So you can do it with multiple markets because you're doing a topical study. You'll be able to glean a lot of information from that. And you can do it with old data too. You can go back to the left, dig into old days, goes back as far as you can. and gather a lot of examples in chart form and annotations and be excited about what you see, because you're going to see that there are very stellar setups in price action, price runs that were like, wow, that literally keyed right off of that. It did everything ICT talks about. Stayed in the upper half, stayed in the lower half. It presented itself perfectly at the right time. And all these things will repeat. And all of a sudden, what will happen is, by having a topical study mindset each week, you go into deeper understanding about that one topic. And there's 52 weeks in a year. Whether you're trading with real money or not, you got 52 weeks where you can do topical studies. Man, you could learn a lot over 1 year doing topical studies like that. When does the daily high and low form?